Good afternoon. Thank you for joining us for today's webinar where we will talk about QwickAnalytics and IntelliCredit, a couple of powerful tools bundled together for issues that you might encounter or confront in 2021. We are in presentation mode, which means you can hear us, but we can't hear you, so certainly submit questions and we'll take those at the end. My name is Sean O'Brien, the president of QwickRate, and I am proud today to be joined on the webinar with David Ruffin. David has joined our team in 2019 to build out the IntelliCredit division that we will discuss today along with QwickAnalytics. But as you can see, David's had years of experience doing and conducting loan reviews personally and supervising teams, in his tenure, over 3,000 loan reviews and probably, what would you say, David, 500 due diligence offerings? So needless to say, we are thrilled to have him as part of our team, and he will show you the new solution that we've developed here at IntelliCredit. Certainly at QwickRate, our mission has been to bring fintech solutions to community banks. We pride ourselves on trying to make them easy to use, make them affordable, so that can translate into huge time savings for all of you. So I hope you'll see what we're doing today and understand that it can make a huge difference in your bank, and then that they're priced affordably and easy to integrate, which is often a huge issue with fintech. Is that there's a lot of wonderful solutions out there, but being able to effectively integrate them into your bank is something that we all have to evaluate. We've, again, really designed these to make them able to be incorporated on in a very seamless manner. Again, from a historical point of view, we always like to joke that in some ways we were a very early fintech when we moved the QwickRate CD marketplace to the web in 2001. In 2013, we introduced QwickAnalytics and have continued to update that offering since then. In 2018, we introduced a CECL solution as part of our QwickAnalytics offering. In 2014, you can see we introduced a stress test, and then, as I mentioned, David and his team joined us in 2019 to build out in IntelliCredit. So we're constantly looking for ways to bring efficiencies to you at the bank. My background, not only as president of QwickRate, I am a director in a community bank. So I experienced firsthand a lot of the challenges that all of you are facing, and we really tried to design these with the community bank in mind. So as we enter into 2021, obviously uncertainty has been a catchphrase for the last year, and certainly will be again this year. There is clearly going to be underlying credit stress that's been masked with all of the liquidity and the PPP loans and all the efforts that the Fed and the government has done to try to ease the burden of COVID. But nevertheless, credit quality is going to be a huge issue as we move forward. Our anticipation is that loan growth will be a bit lackluster, other than obviously there'll be another round of PPP. But again, ultimately trying to evaluate where our borrowers are, where our loans are, where our portfolio is going to take some effort. We think we've designed some tools to help you. The industry continues to consolidate. We ended the year under 5,000 banks in the country. So needless to say, everything increasingly becomes more competitive and more challenging, and incorporating tools that make you and your team as productive as possible is really what we're and other vendors are obviously trying to do. To that end, we wanted to introduce and talk about both of these solutions today, but also let you know that there is some bundled pricing. We want to make these affordable and get these tools to you. So we're offering bundled pricing through the end of the month. These are cloud-based solutions. We, again, have tried to do a lot of the heavy lifting for you, so you can spend more of your time analyzing while we do spend our time aggregating information for you. We think we do a number of different things that oftentimes banks use multiple vendors to accomplish, so we think we can save you some time and money as well. And then we also just think we'll bring you some insights through the data that isn't often always available. QwickAnalytics, we really kind of separate or think about 3 different ways. We think it's a great solution for bank and peer performance. We've built interactive pages about every bank in the country, and then we've also built some regulatory and compliance tools, as I touched on, including a CECL solution and a credit stress test. We are pulling data for our solution from a number of different sites. This just kind of gives you a little bit of a snapshot of all the different sources of, or some of sources of data that we do incorporate into QwickAnalytics. So even though we hope you'll see it's a very seamless and very easy to navigate site, we are aggregating and dealing with a number of different data sources. And again, we think that's part of the value we bring to you, is we kind of aggregate all this up and present it into you in what we, again, hope and you'll believe and see is a very easy solution to navigate. All right, so let's talk a little bit about some of these tools. Let's start off with the interactive pages and the bank and peer performance. So when you would log into our site, every bank has a landing page that you would see that's similar to this, would have your bank at the top of the page. We grab RSS feeds from the regulatory bodies, from the St. Louis Fed. We scrape the internet for anything that's really related to bank news. We want to make this a source of information for you. In addition, as you can see here on the left, we've got the regulatory tools that you can access. You can jump right to the peer reports. We think this is a great tool for data and research. And then we also have some capital market information. Not on our timeline, but we also, in our sister company, Monroe Financial Partners, they invest in community bank stocks. They have a fund that invests in banks. So a lot of the information that we've gathered here in the capital markets section comes from our trading group. We have a number of non-bank users who use this as a source of bank information. But let's talk about the market movers first. This is just one of our tabs. It'll show you all the bank stocks that are up or down in any of the markets today, whether that's the NYSE, the NASDAQ, or the over-the-counter markets. All of these links would allow you to jump right to one of those banks. Again, this is just more information about what's happening in the industry. Again, as we come back to the home page, these are all also available to be accessed through the pie chart. So we give you a couple of different ways to navigate this information. We also provide you with M&A deal multiples. So again, it's another way to keep you on top of what's happening in the industry. It will give you a historical representation of the number of deals that have occurred each year. It'll show you what the price to tangible book or the price to earnings valuations were. And you can see down here are just some sample representative transactions where you'll see the information, obviously the buyer and the target, the deal valuation and target financials. And over here to the left, you can see there's a little PDF sign that we actually put together, a little tear sheet that just summarizes the available information about the deal. So again, just another way to bring you some information. You'll see in all of our pages, we allow you to print every page. You can create PDFs, export the information to Excel or PowerPoint. So not only do you have access to this information on your desktop, but you're able to export it as you see fit. In the bank data and research section, we have a tab called Bank Universe at a Glance. And this just takes you to a listing of all the banks in a particular state. And it allows you to see all of them listed. And it also presents you with just some overview information about the bank. So it's just a quick way you can quickly see and sort these columns. So if you wanted to look at the banks by NIM or non-interest expense, efficiency ratio, cost of funds, any number of different metrics, we have them all laid out for you so that you can easily sort those on a quarterly basis. So it's just a good, quick way if you want to see what's happening within the state that you're in. We have a couple other ways to get at that information, but this is a very quick and easy way to access that. We also have the ability then to go down into your bank information, which you can either access by clicking on your bank name or the My Bank tab up here at the top of the page. When you click on those, it will bring you to a page that looks like this, and this gives you a quick idea of how we organize all of your call report information and that of every other bank in the country. We organize the information in what we hope are helpful financial performance tabs that you can see listed up here, starting with the bank overview tab. And we've kind of broken down the balance sheet and income statement into a number of different tabs. We have a credit section, that includes specifics on asset quality and concentration. And then we also have a deposit market profile. We do grab the summary of deposit data every year that you complete for the FDIC, and that allows us to see your top deposit markets and branches, which we list out over here to the right. So again, you can start to see what we're really trying to do here is we, as an industry, capture a lot of very good information. And the beauty of it is, while none of us like filling out call reports, it does allow us to see each other in every bank in the country in an apples-to-apples way. And what we hope you'll see, what we've done with QwickAnalytics, is give you the power to kind of harness that information very easily and readily. You'll also note here we do have holding company information, and you can also access a number of the reports here. Also at the bottom of the page, you can see we show you at all times 6 full years of historical information. We could change the presentation to quarterly, and so you can see that as well. We have historical information going back to 2007. And then we also always give you the ability to quickly see how your absolute performance compares on a relative basis to not only peer groups such as the UBPR, but those of your state and any other custom peer group that you might create. So again, a number of myriad ways to kind of analyze and understand your performance. This is just another example of some of the pages. Again, all the pages, and this is just an overview section of some of our bank performance highlights. You can print all these pages, as I mentioned, PDF, Excel, or PowerPoint. You can, at all time, pick your peer group. You can pick the time period, whether that's the most recent quarter. You can see information on a year-to-date basis, the last 12 months, really any which way you'd like. We'll always show you the peer median so you can see where the midpoint is, and then we'll also show you where your bank ranks within the peer group, and that's these numbers out here to the right. And we highlight in green or red if you're in the top quintile or the bottom quintile of a particular group. So just, again, a very quick and easy way to kind of understand not only your absolute performance, but also your relative performance. This is another example of, we are on the asset quality page. The top half of the page, we provide you with graphs that you can personalize to your bank. These are just some of the examples, but these are all drop downs that you can select what you'd like to see. Again, just trying to put the information that you value the most at your fingertips whenever you want it. And as I mentioned, this is an example of our asset quality page. As I'm moving forward here, we also have and understand that you at the bank and your team, not only will you internalize this information within your management team, but depending on the audience that you might be presenting or showing information to, maybe such as a board, you might want to change the presentation look of that to something that's a little bit more concise and a little bit more visually appealing to help better translate what's being shown. So this is an example of what we call our performance matrix. And the performance matrix takes the same type of overview information we just saw on the previous page in a more tabular and granular look, and this summarizes it. So this instance, it shows Camden National Bank, a bank in Maine, versus the Maine peer group. And you can see we show here this peer group's peer median, the bottom 20th percentile and the top 20th percentile. But then these individual boxes show the bank's performance and where they stack up within that peer group and the ranking here to the right. So this just takes something that's much more data focused and makes it more visually appealing and oftentimes easier to understand for somebody who's not looking at this information on a daily basis. So we spend a lot of time and take a lot of pride in not only making the site easy to navigate, but also multiple ways to make sure you're being able to deliver this to the audience that you want in the most effective way. The credit matrix is another example of a report that we've built with the help of David and his team. Obviously, the call report doesn't show us a whole lot about credit, but what it can show you and does show you are problems that are already acknowledged by the bank. And so what we can see here is not only those acknowledged problems such as non-performers, but we can also get a sense of where the bank stands compared to a peer group in terms of concentrations, overall leverage of the bank, right? So, potentially looming risk within a loan portfolio. And then we can also get a sense of their capital and persistence power, which really kind of defines, the bank's capacity to absorb losses through earnings, reserves, and capital levels. So again, those numbers are important on an absolute basis, but we also think there's something to be learned, from looking at those on a relative basis. And that's why we built this credit risk matrix, which you see here, which again just kind of highlights some of those components individually, where the bank's numbers are, and then how it compares to a peer group. We think this is important for you to see because this is how, probably your regulators looking at you before they come in for an exam. Now, certainly 2020 represented a year where there was a little bit of a hiatus from the regulators. So we anticipate, certainly more scrutiny this year and next from not only a credit stress, point of view, but just even loan review as, you and the regulators really try to figure out where every bank's, credit risk really lies. So this is just a good top-down way of kind of seeing, how you compare to, to other banks. One of our reports that we like and a lot of our users certainly have enjoy as well is one of our peer reports we call Peer Watch Trends. This is an example of one of the report pages from that. We give you the ability to compare yourself to multiple peer groups. It can be your UBPR peer group. It can be your state peer group. It can be a custom peer group like this, where you have the ability to select up to 11 banks to compare yourself with on a side-by-side basis. We limit this particular report to 11 banks solely because that's the most we can fit on one page. But you can see here some of the things that we will show you, again, on a side-by-side basis when you pick those 11 banks, is we'll show you 5 years of historical numbers, again, side-by-side with competitors that you've selected. We'll show you how the last 4 quarters have looked. This column represents the last 12 months. We show you the peer median numbers for the state and the UBPR peer group. And then we also we'll graph these same numbers up here with your bank in green and the peer group medians graphed as well. Finally, we'll show you the most recent quarter performance. So needless to say, as I quickly went through that, there's a ton of information on this report, and all you had to do was 1, create a peer group, and 2, hit the print button. And so this is, again, one of the things that we're really trying to drive home with QwickAnalytics is, this may take somebody in your bank a lot of time to put together on a quarterly basis. You just don't have to do that anymore. We can give you the information you're looking for and looking at in a much more concise and, certainly, hopefully, time-saving manner. All right, so let's touch on, some of the regulatory tools that we have here as well. We're really proud of the fact that we built a CECL solution in 2018. We were kind of sitting on the sidelines with CECL. The regulators began doing webinars in 2018 where they, I thought, very appropriately and candidly discussed some of the practical considerations and limitations that CECL was going to present for community banks. Much like the ALLL today, they fully expected banks to tackle this in a number of different ways. And then during the course of the series of webinars they did, they talked about ways that banks could tackle it. And if you didn't have loan level information captured for the last 5 or 10 years, what was a bank to do? Well, they suggested using call report information because at a minimum, it provided you with like groups of pools and good, consistent historical information around losses. So once we heard that and they really laid out how a bank could do this, we went ahead and decided, hey, this would probably be a really good solution for a lot of our customers. So we built it. So we've essentially created a tool that banks can use. We look at your portfolio. We go back to 2008 with historical information. We use the weighted average remaining maturity methodology. We built apples-to-apples peer comparisons to show you how your peers have performed in the same like periods. We give you the ability to update for quarterly numbers, modify with additional loan pools. But it's a pretty simple, straightforward and understandable approach that can make CECL solvable for you, without a lot of anxiety. So, we're really proud of this. This is part of the QwickAnalytics solution, and certainly invite you to, let us demonstrate it for you with your numbers, but because they're out there today. The big pieces that your bank has to provide are the weighted average remaining maturities from your core system. So this is just an example of one of the solutions QwickAnalytics provides. A second solution that we're really proud of and has been met with really great response from our banks and regulators is our interactive credit stress test. Again, designed from guidance provided by the OCC back in 2011, coming out of the last crisis. It was a way for community banks to address stress testing in a understandable and reasonable methodology. It's call report based. We run the tests right away for you. They're already built and run as soon as you log into QwickAnalytics. We run 3 different tests, one based on your historical loss experience. We run one based on your peer group's historical loss experience. And third, we do a break the bank scenario or a reverse stress test, and we identify for you the amount of capital cushion that you have before you would breach well capitalized, adequately capitalized, or critically undercapitalized. In addition, you have the ability to modify the assumptions in our new interactive versions. We'll account for PPP loans and any other government guaranteed loans. And we'll also allow you to input your own internal capital trigger if that's something different from the just well-capitalized status. So this is, Steve Huntington and Greg Dingens from our team spent a lot of time building this. We think it's, again, a really great solution. Takes a lot of the mystery out of stress testing and should be the first step that banks do before even probably considering any loan level type of stress testing. So again, certainly encourage you to take a look at this with your own numbers. As I mentioned, at the heart of what we do at QwickAnalytics is give you the ability to create as many customizable and relevant peer groups as you would like. As a default and as a placeholder, we have already defined for you your UBPR peer group and your state community bank peer group. That's what we call the QCBI. It stands for the QwickAnalytics Community Bank Index, and we've already defined those for each of the states. But we do give you the ability, as you can see here, to create your own peer groups either at the bank or holding company level. We give you a number of different tools to generate those peer groups. You can select banks simply in your backyard. You can put in asset size filters. You can put geography filters. You can put financial metric filters, all designed to give you the most relevant and meaningful peer groups. Occasionally we'll counter banks who say there really are no other banks like us. We've always been able to find other similar banks because we have enough filtering capabilities to really hone in on what your business model looks like. And I promise you there's probably, there may not be 100, but there's probably 10 or 15 banks who have similar business models. So we're really proud of this. We think it really adds capacity and horsepower to our solution. And again, we've tried to improve this process on an ongoing basis. Finally, one of the tools that, if everything we've already built for you in QwickAnalytics you don't find enough, or if you want to do additional research, or if you just like putting things into your own spreadsheet, we also have an Excel add-in tool that you can download, and it pulls in information from every bank and holding company in the country. You can import those into your own spreadsheets, either through the custom templates, through our templates, or you can just do research. So at the end of this month, we'll be introducing credit union data into the add-in tool as well. So it really is the complete and comprehensive source of bank information. So we think this is a great add-on to our already formatted templates that we provide to you in QwickAnalytics. But this is certainly something that if you or your team are building reports on a quarterly basis, I promise you this will probably save them time. They'll probably be able to do a lot more. And again, we're happy to walk you through recreating your templates or assisting you in teaching you how to build new ones. So, very excited about this, and again, would love to have the opportunity to demonstrate it for you. So at this point, I am going to turn the presentation over to David, and he is going to walk you through the IntelliCredit section of our presentation. David?
Yes, thank you very much, Sean. The reference was made early on about this being a bundled offering, and I think that's an apt phrase here, because what we'd like to be seen as a good one-stop offering for critically important information needed to manage your banks. Much of everything you've seen so far with Sean, of course, has been public data, and it's very robust and very critical information. But that's generally how the peers and the investors and the regulators see your banks. We kind of built IntelliCredit on the basis that one of the critical needs or one of the critical parts of really managing credit risk is non-public data, which is information that only you are privy to within the idiosyncratic nature of your own loan portfolios, to again identify emerging risk on the presumption that number one ultimately mitigates ultimate loss, and also the earlier you can get on top of a problem tends to give you more flexibility in managing that. But in the interest largely of our association with QwickRate, clearly the fact that we have built this tool and as a complement to everything Sean just showed you in QwickAnalytics, based on a very innovative and affordable what we call credit intelligence tools. Fundamentally what that is, and that we'll talk about with a little more detail in a moment, is the ability to identify macro trends in your portfolio and then immediately drill down to the individual borrowers or loans that make up those trends, either good or bad. It has the ability to identify loss forecasting and stress testing, which will soon be forthcoming at a loan level. And also, in a very revolutionary way, we tied this to what we call smart loan review. So the specifics of what it is in IntelliCredit is this. There are two cloud-based applications. One is the Portfolio Analyzer. The other half of that is a smart loan review application, which could be used for internal or in-house loan review work. It's smartly informed by an analytic tool called the Portfolio Analyzer. And then we do offer at IntelliCredit a more traditional loan review service as a so-called third-party vendor, obviously using these web-based applications. It's very important that you understand that these can be looked at separately or companioned on the same platform, which we call the IntelliCredit portal. It's agnostic to any core system. We frankly use any type of data, whether it's a spreadsheet or a database that you're using to manage your loan process, and we can ingest that into the Portfolio Analyzer Smart Loan Review application. And therein lies another key attribute that we're very proud of, the ease of setup. Unlike some other offerings out there, there's no such thing as weeks or months of startup time or an inordinate amount of dedication of your staff to do it. Most likely setup for us is counted in days. And it's just a matter of, again, we map out your unique data sets of your loan portfolio, and then from that point on, it's pretty much an automatic. It's also important to understand that Sean alluded to this. I've been around a good while, been involved in a number of loan reviews, a lot of due diligence work and understanding all the machinations of credit. But the great thing that QwickRate has afforded us is the ability, the resources to build out this state-of-the-art fintech tool, but it is indeed built and nurtured by credit experts. Again, available separately or companioned on the same platform. So why is IntelliCredit needed today? It's also been alluded to, as Sean said in the intro of this presentation, about the incredible uncertainties that COVID-19 has given us. That's I think, temporarily been masked or accentuated by the amount of stimulus and regulatory relief, which have been unprecedented and probably growing. There is a consensus building that despite hope of vaccines and therapies, we're still months away from any form of economic normalcy, and therein lies the real issue probably for everyone on this call today, and that is we know fundamentally that our credit, our issues in our loan portfolio reside on Main Street, not Wall Street, even though Wall Street certainly dominates so much of the headlines around where the future of the economy may be. Our portfolios are a patchwork of disparate subsets, each with differing risk profiles. I think that's one of the real cardinal legacies of the COVID environment, is that unlike a decade ago when we arguably had one industry that took us into a deep spiral economically, we've now got a whole plethora of industries that pepper our loan portfolios that we now have to figure out who may or who can survive this pandemic and its economic after effects. I think 2021 will require a significantly more proactive credit risk management on behalf of the banks to quantify our risk and to frankly explain them to our regulators. And therein lies what we think is the greatest benefit to you with IntelliCredit, and that is its ability to give you the ability to write your own credit risk profile script before any regulator or frankly investor does it for you. So what we're going to do today is talk a little bit about four primary attributes of the IntelliCredit solution, and that is staying on top of your risk, knowing your credit hotspots, your ability to customize and get standard reports, and how does Smart Loan Review interact with this diagnostic tool. The Portfolio Analyzer, again, answers three of these key, so to speak, key attributes, and that is the ability to stay on top of your emerging risk, knowing where these unique credit hotspots are, and your ability to create reports for one-off management issues or for your standard board report packaging. It also is, as we say, stay on top of risk. That's attribute number one. Again, it has the ability to drill down to any degree of detail that somehow is identified in a macro trend that shows up in the analyzer, and that I think is critically important. So it ties so-called macro portfolio risk with transactional credit risk, which in and of themselves, as you know, are different sciences to understand, one being traditional credit risk management, the other is more of a statistical game. The second piece is to know your credit hotspots. And that is important, again, to be able to identify these worrisome concentrations of industries, loan types, collateral, other subsets, again, that are the unfortunate legacy of that. A couple of times I'm going to take the opportunity to just show you a couple of minute videos to identify that. So if you will, just this will show you the ability to identify hotspots.
Many COVID impacts on financial institutions, and one that differs from the previous crisis is the urgent need for you to segment or subset your loan portfolios by industries and concentrations. Credit risk hotspots will be emerging from different industries or subsets of your borrowers. Thus, now more than ever before, you will need to look at your loan portfolio as truly a sum of its many parts. As we said, you'll need to look at subsets of your loan portfolio as they may have starkly different credit risk profiles. Portfolio Analyzer gives you the options of including or excluding all identified subsets. In this case, SBA loans. Industry profiles are critical to identifying emerging risk. Certainly restaurant loans come to mind with COVID impacts. Some of our hardest work now begins in the bank in discerning which borrowers within a hotspot industry will survive. We call that qualitative management of the COVID-affected loans. Hospitality loans are another hotspot that come to mind. Our COVID tracker provides a multi-user interface and a repository for emails and workout plans. In this case, the ability to upload or understand information that is very borrower specific and with control and audit constraints. One of the best gauges of emerging credit risk is the migration of risk rates within the past categories. Construction and development loans have a heightened risk in the portfolio as a whole. Again, unlike the last crisis, COVID has affected far more industries with disparate, uncertain impacts throughout your bank portfolios. Portfolio Analyzer is your solution to reducing this uncertainty.
Third, in what we consider our critical attributes would be the ability to get instant reports. We have a whole array of standardized reports that most banks are used to from a management and a board perspective. But through the ability to do querying and pivot tables, it gives you, if the data exists, then absolutely the sky's the limit on what kind of format or representation you would like to show your management team, your board. And I might add, one of the things we also offer that is, I think, quite different from the rest of the marketplace in many ways is we don't charge per seat charges. It's up to the institution to determine who has access to this information and who can use these tools, but we don't charge a per seat fee for that. This leads us to what may be the most revolutionary part of the IntelliCredit portal, and that is the fact that we decided to tie loan review to that process. So I would like to show you just a very, very quick video of that functionality and why we think that makes loan review so revolutionary relative to tying it to the Portfolio Analyzer.
IntelliCredit has brought loan review, arguably a decades-old state model, out from the wilderness and into an innovative and incredibly efficient interactive alliance with your ongoing portfolio analytics. Here you can use loan quality indicators to begin a smart sampling for loan review's next engagement. You notice that ag loans have disproportionately higher 30-day delinquencies. Using the ever-present drill down capability, you see that this happens to be one large borrower that you have performed previous loan review on that entity. A click on the hyperlink views the detailed loan review report. Smart Loan Review provides dynamic production dashboards tracking ongoing engagement, previous loan reviews, and overall portfolio loan penetration. Perhaps our greatest compliment to date has been the efficiencies provided by what we call our real-time clearing of exceptions. We track exceptions in legal doc, credit, and loan policy. An example of this would be where you are able to, in real time, clear exceptions through those being posted by the reviewers and then have loan officers or credit admin personnel upload documents or information that would inform a reviewer to what we call real-time clear of the exceptions. This and the substantive aspect of loan review has caused Chief Credit Officer to say this is the most substantive and efficient loan review that he had experienced in his entire career, including the fact that it gave me time to do my real job. So again, the fact that we tied a loan review to the IntelliCredit portal and the Portfolio Analyzer, I think, is very important. It allows for a smarter, more intelligent sampling of where emerging credit risk could be. Again, I think that's clearly one of the challenges for us in 2021 to effectively catch up on the assessment of the underlying credit risk in our portfolios. The efficiency is remarkable in the real-time reporting portals and the exception real-time clearing that creates tremendous efficiencies for the entire deliverable. It does have standard management and board reports. And again, it's designed for third-party and in-house loan review applications. So what I'd like to conclude my part of the presentation with is recognition of the various stakeholders in our industry. So what is IntelliCredit? What are the benefits
of IntelliCredit for the various perspectives. Starting out obviously with chief risk officers or chief credit officers would be identifying and assessing your aggregate and transactional risks. It would be a much more efficient capability to create routine and standard reports, as we've talked about, through the querying and pivot tables, create your own view of what you consider your favorite concerns to be. It quantifies suspected hotspots. It identifies illogical migrations of risk rating and pricing. It has even been used to determine quality control, where in one bank a $4 million loan had been miskeyed as a 0.4% interest rate instead of a 4% loan. It creates real efficiencies through real-time viewing and clearing of loan review findings and exceptions when the Smart Loan Review deliverable is used. It ties risk profiles of loan review samples to credit portfolios at large, and it reduces credit surprises to the board and management, which is critically important. As far as executive management is concerned, it stays ahead of potentially negative or needing to be further explained portfolio trends impacting perceptions of board members, investors, and regulators. Provides proactive rather than reactive opportunities to work with credit risk managers to formulate or synchronize and adjust credit strategies and policy recommendations to the board. I think it empowers executive management to be, in effect, captain of your own ship, and allow you to write your own script before a regulator does it. An example of that was we have a client in Nebraska. Obviously, not being in Nebraska, it wasn't a surprise that he's got 650% of his risk-based capital tied in ag loans. But with the use of this tool, he's able to disabuse either an outside investor or a regulator that somehow this degree of concentration is problematic by being able to immediately demonstrate the how clean the portfolio or benign the portfolio is in terms of its performance. And again, I think it minimizes the conveyance of credit surprises to the board. I've been working with bank management and boards for many, many years now, and one of the biggest single problems there exists, I think, is when there becomes, either wittingly or unwittingly, too many surprises that hit the board relative to credit. And I do think 2021, because of what we've already alluded to in terms of the uncertainty that permeates the COVID and post-COVID world in banking, is that's going to be front and center in terms of our sensitivity to avoid those kind of surprises. They will always be surprises, but I think the goal of all bank management is to minimize and avoid those. From the board's perspective, I think IntelliCredit provides real-time informed credit risk performance profiles and traditional and customized reporting. It also, I think, helps to minimize that age-old stress point or negative perceptions between a board and management that somehow credit performance details is either, from a board's perspective, a data dump provided by management, or from management's perspective, a time sink involved. One of the things that we feel so strongly about is the efficiency of this tool being used to, frankly, avoid having to assign it over to other assets in the bank to create reporting. We have CEOs that are using this directly on their own without having to assign it to people to do reporting and analysis. And it invests, again, in minimizing credit surprises, even though unwitting, again, is a damaging factor in a healthy board and management dynamic. Lenders, again, as I said earlier, we do encourage and allow for the bank can allow this for any lender to see it. We don't charge additional seat charges for that, but it provides the ability of the lender to have to customize an individual look at their own portfolios and the key metrics that are normally tracked. It enhances kind of a heads-up notification of your ability to service and potentially mitigate emerging credit problems. Again, time is of the essence. There's a distinct empirical proof that early detection of credit risk mitigates loss and certainly enhances the flexibility you may have in dealing with those problems as they begin to emerge. And of course, I think it invests in an improved dialogue between credit risk and production personnel within the bank. And finally, regulators. I think it gives them, again, I think this is one of the largest challenges the banking industry is going to have in 2021 is once regulators get back into a more normalized examination process and understand that with all the things that have already been alluded to on this presentation in terms of the masking of potential credit risk, is that there's going to be a heavy burden on all of us in the banking industry to accurately explain what is unique about our current portfolios. And for us to be able to use tools like this to give regulators that sense that we are captain of our own ship, it does give them the ability to kind of see the same kind of dive down that you would be seeing, and in some cases, again, disabuse them of particularly potentially negative proxies or negative thought about where you might be based on public data that they're seeing before they begin their examination. And again, I think in the end, it's exactly what we say is the greatest benefit of IntelliCredit, and that is your ability to write your own script, frankly, before a regulator does it for you. In conclusion, I'm going to send you, those that participated and attended today, 2 recent articles in the last 2 months that I've authored and have been published. One being, again, our credit lives on Main Street, not Wall Street, and why we have to be focused on that in terms of managing our risk, particularly into 2021, and also why, the second article, why making loan review both smart and now, I think is going to be important for us. Thank you so much for attending today, and I'm going to hand it back to Sean, and we certainly look forward to hearing from you. And if in any way we can discuss any details on how IntelliCredit would be helpful to you at your bank, we would gladly entertain a meeting or discussion or Zoom call for that, to that effect. Sean?
Okay, thank you, David. Let me get back to the screen here. So, hopefully, again, you can see why we're excited about having David and his team with us in IntelliCredit. We think that he's built really just an outstanding solution. I think it complements what we've done at QwickAnalytics, where we are trying to help you be more efficient, but also take advantage of the wonderful, and plethora amounts of information that we create in the bank, and be able to harness that and organize it and be able to utilize it, right? I think we would all agree we make better decisions with better information. And I think both with QwickAnalytics and IntelliCredit, we are providing you and putting on your desktop, actionable information that can make us all better at our jobs. And so that's why we're excited to show these to you. We truly do believe these are easy to get started and incorporated. As David mentioned, we can work with any core system to get you your information uploaded into IntelliCredit. Obviously, QwickAnalytics is very easy to get up and running, and we've designed them to be very easy to navigate and understand. So we will provide training, but it's not something that we're afraid that you won't pick up after you see how easy these are to navigate. Finally, it's been a hallmark of QwickRate. We want to make these things affordable. We want people to take advantage of them and use them. We in some ways pride ourselves on it. We're not pricing people out of the market. So we hope you take a look. All of these things for you, as QwickRate customers, Jen and her team and our customer support team with Jen, Andrea, and Zoe, Debbie, they're all here to help. The same, rings true with QwickAnalytics and IntelliCredit. We will be there to provide as much assistance as you and your team needs. And again, I think to make the introduction easier, that's why we decided to host the webinar today to offer the bundled pricing, because we would like to show you everything, because we do feel like there's just a number of different ways that it can positively impact your bank. So we certainly, again, as David said, we'd love to show you both QwickAnalytics and IntelliCredit. We'll show you your data. We certainly appreciate you taking time out of your busy day here early in January to learn a little bit more. And if we can help, give us a call, email us, and we will be happy to set up a time to walk you through both of our new solutions. And so with that, Jen, I don't know if you can see, I can't see, but did we have any questions that we needed to take today?
Not at this time, no, sir.
Okay, thank you very much. Well, on behalf of David and Jen and myself, again, thank you all very much for working with us at QwickRate. Thank you for taking time to learn more about QwickAnalytics and IntelliCredit, and we will look forward to hearing from you soon. Thanks again. We'll leave this screen up for a while, but we'll sign off for now. Thanks again. Bye now.